Good morning, trading world. It is November 22nd, 2021, right at 8:26 a.m. And this is my pre-market outlook on the SPY. All right, we have a holiday shortened week that may have all the boom of a full week. Last week was a full trading week, and market makers estimated the risk at plus or minus 5.32 on the SPY. This week, we only have 3 full trading days, and market makers are estimating this week's risk to be plus or minus 7.73. Does that seem funny to you? It does to me. What it says to me that there's a big possibility of a wild move, or a wild move, the possibility of a wild move is elevated. That's not saying whether that move is going to be up and down. It just tells me there's a chance for an elevated chance for a wild move. And also what it says is that market makers don't have a good handle on estimating risk right now. The market is very inefficient at estimating risk. That has been proven to us over the last 4 or 5 weeks with the burst outside of those expected moves given by the market makers. So, there's no way to really handicap what will happen, but you need to be prepared for a wild ride either way. So, one way you can do that is by not trading at all. Another way to do that is to make sure whatever move you take, it has a guaranteed risk outcome. Meaning, if you make a trade, you know exactly what's at risk. You can do that by buying a put or call, because if you buy the put, you know that what you're putting at risk is the premium that you paid for the put or call. You can't lose any more than that. But you have to make sure that whatever that premium is, you're okay with losing. And that's a guaranteed risk scenario where you know what you're putting at risk. There are other ways to do this by doing a debit spread, where you know what you're putting at risk is whatever the amount is debited from the spread. So that is another way to take care of this. But either way, what you're putting up, you have to make sure that you're okay with losing that amount. It makes no sense to have a risk, a guaranteed risk amount, and if you lose that amount, it sets your account back to a point where you can't come back from, or puts you below the threshold that you need to continue. Another thing that I want to shed some light on is that if everyone in the market is leaning one way for a particular move, let's say, for example, we have indicators and everything and their mama are looking at a down move, but we don't get that down move. What usually happens is we usually get a much more explosive move in the opposite direction. With everyone leaning one way and then the market taking off the other way, makes for a much more explosive move the opposite direction. And the reason why, if everyone's levered up to be bear and we get that opposite move, not only do you have the people that are buying on trend or that opposite move, if everyone is expecting bear and we go bull, you not only have the bull buyers of that move, now you have the bear buyers or bear contributors contributing to that move, not because they want to, but because they have to exit bear moves. And that's usually what gives us that over-the-top explosive move. So, coming into the day, key levels of support. We have the 469, 468 area. If we break the 468 area, we can go for a ride. We could see down toward 466. Key levels of resistance. We're already at 471, or we've already been around that 471 area. But above that, we have 472, 473. So, the basis of this week, if we hold 468 and bounce up, we could go all the way to 475. We could ride a long way. But just as well, if we close below 468, we can ride a long way down. We can hit 466 and possibly even below that. Expected move to the downside measures out to be about 465 and some change, 465.98. And expected move to the top measures out to be 475.45. So at some time this week, we could hit either of those moves. It's very rare that we hit both, but I have seen it. So be prepared for a wild move either way. Now let's get into today's scenarios. All right. The first scenario is for a possible range day. Range days comes in so many variations that it's impossible to cover each variation of a range day. But just know that we establish a high, we establish a low, and we pretty much chop between those areas for most range days. However, there is kind of what I like to call the expansion range day, where we establish one level, we establish another level, and then we kind of push the boundaries as we chop between those levels. We either chop up or higher outside of the first established level, and if we hold the bottom level, I'm going to consider that to be a bull bias range day. And then you have the opposite, where it could be a bear bias range day. And by me saying range day, you have to be prepared for all of those scenarios. And you have to watch for the confluence and divergence, or I should say convergence and divergence of internals and your indicator to kind of give you where these highs and lows are possibly coming. So that's scenario number one. I've given the key levels of support and key levels of resistance, so keep an eye on those areas throughout whatever day type we have, but that's going to be your guide. All right, scenario number two. We have a range day or rounded reversal for scenario number two. Probabilities are not that important to me right now because it's so close as to, or it's so hard to handicap the probabilities on the day types that it just doesn't matter right now. You have to be prepared for whatever may happen. And on the range day, looking at how things may start, this range day could go either way. We could come out at the open and migrate back down toward the 469, 468 area and push through, and then whatever move that we had at the beginning of the day, we'll have that opposite move for the second half of the day. We always have our midday chop or cooling off period. But like I said, this week is so hard to handicap. We could continue straight up off the open and put us around those key resistance levels, 472, 473, and get our midday chop there, and then have a second half, the opposite move, the second half of the day coming back down. It is quite possible. So that is our second scenario. Let's take a look at the third scenario. We have a trend up day structure. We usually come in and we get a pullback off the open that's usually taking us back towards the previous close. As of Friday, it was 468.89, and usually around that area before is where we would find some type of support. Due to the order activity around this 468 area, I would anticipate a little more sideways movement to down around that area before reversing and getting a trend up morning, which would take us toward 472. But at some point we would stop and get our midday chop somewhere in between, which may likely be 470, 471 or so, before starting the second half of the day with a slight pullback before resuming the main trend of the day. Those are the scenarios. Again, key levels of support for the day are going to be 469, 468, and 466. Key levels of resistance will be 472 and 473. I give the scenarios each day not to predict what will happen, but as a pathway to somewhat prepare for. So things may not follow the exact path, but the day structure is the day structure, whether it's at the certain levels or not. There are key things that we pick up from each day structure. So again, levels are not going to be as important in the scenarios of each day. This is why I did kind of plot out or mention the key levels of the day. But as I said in the beginning, there is an elevated risk of a wild day. I can't tell you whether it's up or down. All I can do is to tell you or warn you to be prepared. So, as always, know your risk, and this is a part of that preparation. Knowing your risk and what you have at risk. And again, wishing you a successful day of trading. Have a great day.